The stock now. LIC reports a strong performance in Q4. Their embedded value growth is better than analyst estimates of 1 to 2%, while VNB margins for Q4 came in line with estimates, witnessing an improvement sequentially. My colleague Surbhi Sataria caught up with Siddhartha Mohanty, who is the chairperson at LIC, to discuss in detail on their Q4 performance. She began by asking about the FY24 growth target with respect to VNB margin and embedded value. Listen in.
Our embedded value as against 5.4 lakh crore, now it is 5.82 lakh crore, and we have shown a growth rate of 7.59%. Going forward to your question, I think we will be able to maintain that, because if you see our product line, product mix, we have consciously developed a non-par product which will contribute to EV to a greater extent. So that will add up to our EV, and going forward there will be this growth will be maintained, rather it will be improved.
Okay. So just from that question, sir, you said your non-par segment is going to grow. So, in FY23 we've already seen that from 7% your non-par has grown to close to 9% now. So now what is the outlook for FY24 and 25? What is the target when it comes to non-par segment?
You see, our non-par share to AP, we have a target of 15%, but that cannot be achieved in a year. So sequentially every year at least 2-3%. This year 9% we have achieved. This year will be at least 2% target will be there minimum. It may be more, but the way we are working, and we have trained our people and launching new product in non-par segment, attractive product, those will get traction, and whatever target we take for non-par share in AP, that will be achieved.
So by FY27 we should, 26-27 we should get to the 15% non-par
that
target?
We have kept a target over 3 to 4 years. 1 year is already gone. You have seen growth is there almost 2%. So that will be our target to achieve that.
Got it. So even when you look at the VNB walk, now the growth is coming from the economic variance, and not largely because of the impact of the newer products, also because of the recent budget changes. Now where do you see the VNB margin outlook for in FY24 importantly, sir?
You see, our commitment for VNB margin, I think 26, whatever we gave, that we have already achieved, 16.2 this year, 23. So definitely objective will be at least 1%, 2% more year on year. That objective will be there, and I think we will achieve that.
And also, you were looking to increase the distributed surplus from new business from FY25. So you've already increased from 5 to 7.5% in FY23. You were going to increase it to 10% FY25 onwards. So what will that have an impact on your VNB post FY25?
Those will have not much impact. Rather, I will say a positive impact will be there. Whatever surplus we are making change, right, it will have some impact. Positive impact will be there.
So to what extent?
That exactly our actuarial people, they will calculate and say, but some impact will be there.
Okay, got it, sir. From the banker assurance channel, that has been a concern, industry concern. Your agency has been strong. You've seen some growth in the banker channel from like close to say 3% to 3.4%. So what's your outlook over there, and how many more bank tie-ups are you looking in FY24?
In banker, if you see, we have shown premium growth rate more than 25% growth rate from banker channel, premium growth rate, and we have tied up with 80 bank partners are there, and public sector banks are also there. This year also focus, because last year we focused on banca, so we could get 25% growth in premium from banca channel. And this year more focus will be there. We have totally revamped entire system. We have deployed very, very competitive people, efficient people in banca channel. And technology also we have integrated, so that banca and alternate channel, not only banca, but alternate channel also with our partners, so that tech integration is also focused, because that is the main stumbling block, because the partners are there to tie up, but unless the technology is there, so that also we are addressing. And current year we will definitely observe there will be total uptick in banca channel.
So you briefly mentioned 80 tie-ups, right? So is there a target internally that you've decided to?
Yes, for each bank there is a target, and our teams are working on that.
Okay, and with the open network, will that add, with the open network of, each bank can do up to now 3 partners, will that also help in your banker channel?
That will also definitely help, because open network, opening up banker channel, more banks can also tie up with you, who have already tied up with other private insurers. Because of that, they are also eager to tie up with LIC. So that advantage LIC will take.
Sir, Adani Group Companies is looking for a fundraise. So my first question to you is, will LIC participate in any of those fundraisers? They're trying to do a fundraise through QIPs. Also, if not participating in the fundraise, they've seen a recent rally. Adani Group stocks have seen a recent rally. So will you be looking to pare your stake down in some of your Adani investments?
You see, we do not talk of any individual stock. As a large investor, largest investor in the country, we see the portfolio as a whole. What is our investment policy and how much we earn for our policyholders? What is the total yield at the end of the year, not from particular stock. So holistically we view, and so far as individual stock, you are telling, when time comes, there are our investment teams are there, they look into all other stocks. So at that time, whatever proposal comes, they may take a call depending upon all other factors.
Okay. Last question from my side, sir. Your market share in premium and in number of policies in FY23 has gone down. Is this a one-time thing because of the recent budget changes? Are you all taking any measures to address this number? And what is the target going forward over there?
You see, when you talk of market share, now we are focusing on profitable market share, not market share per se. So profitable market share means we have to redesign certain products. So you are telling some policy has also gone down because certain products we redesigned, revamped. We enhanced their sum assured. So obviously premium will increase, because they had a high attrition, high lapsation. So that affected, because when you redesign something, that affects the normal market. So for that, some hit was there. But and a premium also, you see, marginal dip is there from 63.25 to 62.58%. But since focus will be on profitable market share, we will focus on profitable growth in market share. And last year, we have shown 16.67% growth in first year premium, 16.67% total NBPI growth, having such a large, huge base, that we have also shown that. So definitely going forward, we'll focus on profitable growth in market share.
All right, profitable growth and growth in market share